Assalamu alaikum wa rahmatullahi wa barakatuhu. Students, we will see illustration 29 sum. Okay, maybe the picture is not clear. I want you all to open the textbook page number 158. Okay, so just see here, the balance sheet of W and R, who shares profit in the ratio of 3:2, was as follows on January 1st, 2015. See the balance sheet they have given you. Here, balance sheet of W and R as on Jan 1st, 2015. See the asset side, cash in hand 5,000. Okay, yes, I want you all to open the textbook because here it's not clear. Next is sundry debtors 20,000. From that, the provision for doubtful debts is deducted 700. So outer column you have 19,300. Then stock is 25,000. Plant and machinery is 35,000, and patent is 5,700. Okay, and the total is 90,000. And see the liability side, you have sundry creditors 25,000. Partners capital, W's capital is 40,000 and R's capital is 30,000. So total is 70,000. Okay, and see the adjustment below which is given. On this day, B was admitted as a partner on the following condition. Okay, so who is the new partner? It is B. Okay, what is the first adjustment? He was to get 4/15th share profit. Okay, so B will be getting 4/15th share profit. Okay, 4 divided by 15th share of profit. Okay, and he has to bring rupees 30,000 as his capital. So B will be getting 30,000 as capital, and he will pay cash for goodwill, which will be based on 2.5 years purchase of profit of last 4 years. Okay, so in this sum they have not given you how much is the goodwill amount. Okay, but they have told you that B will be paying goodwill how on the basis of 2.5 years purchase of the profit of last 4 years. Okay, so you have to calculate the goodwill amount, and this is done. This method is done. Okay, what you have to do is you have to take the average of 4 years profit. Okay, and that means you have to total 4 years profit divided by 4 and into 2.5 years purchase you have to multiply. You get one amount, that is the goodwill of the whole firm. Okay, then you have to see how much is B's share. Okay, so when you get one amount, to that you have to multiply 4 divided by 15, because 4 divided by 15 is B's share in the profit. Okay, so that amount will be the B's goodwill amount which he has to pay in cash. Okay, we will see how to do that first. So that see here below, if you see, okay, see here solution. When you see the profit which is given is totaled. Okay, so where is this profit? See, it is there in the adjustment. Okay, profit for first 4 years is given. 2011 it is 15,000, 2012 it is 20,000, 2013 it is 14,000, and 2015 it is 17,000. So total this 4 years profit. Then you have to divide it by 4 to take the average, and to that amount you have to multiply the year's purchase. Okay, so when you do that, you will get the amount of goodwill which should be brought by B. Okay, so see the next page. If you see, it will be more clear. See here, so 66,000 is the total profit divided by 4. So when you do that, you get the average profit of 16,500. So to this 16,500 you have to multiply 2.5 years purchase. Okay, so 2.5 years purchase, when you multiply, that is 2 into 2 is 4 plus 1 is 5. So 5 divided by 2, you get 41,250. So from 41,250 is the goodwill of the whole firm. So you are calculating the goodwill of B. Okay, so what is B's share in the profit? It is 4 divided by 15. So 11,000 is the goodwill amount. Okay, so this B should get this 11,000 rupees, and this 11,000 rupees goodwill amount will be shared among the existing partner in their old ratio or sacrifice ratio. Okay, so usually most of the time you will be taking the old ratio only. Okay, we have to assume that the old ratio itself is the sacrifice ratio. Okay, So we will come back to this sum. Okay, so the third adjustment is done. Okay, now we will see the fourth adjustment. W and R would withdraw half the amount of goodwill premium brought by B. Okay, that means W and R is going to withdraw half the amount of goodwill amount. Okay, half goodwill amount. See, the whole amount will be transferred to partner's capital account. From that, half amount of goodwill will be withdrawn by W and R. Okay, next is fifth adjustment. You all see, the asset would be revalued as sundry debtors at book value less a provision for 5%. Okay, that means from sundry debtors 5% should be deducted. Okay, then stock at rupees 20,000. So how much was the stock before? It was 25,000. That means the current value of stock is 20,000. So 5,000 is a loss. Okay, so your journal entry will be revaluation account debited to stock account. Next is plant and machinery at rupees 40,000. So what was the amount of plant and machinery? Before it was 35,000. Now it is 40,000. That means 5,000 is the gain. Okay, so whenever there is a gain, the gain your revaluation account will be credited. Correct. So plant and machinery account debited to revaluation account. Okay, and next is patent. Okay, is there anything related to patent in your adjustment? Yeah, it is 12,000. But how much was the patent before? It was 5,700. Okay, so the difference amount is a gain. Okay, so your journal entry will be patent account debited to revaluation account. Okay, next is liability was revalued at rupees 23,000. Okay, so how much was the liabilities? One bill for good purchased have been omitted from book. Okay, that means liability were revalued. 23,000 is the liability. Okay, and one bill for goods purchased has been omitted from the book. Okay, so 3,000. So there was some creditor which was not entered. Okay, so 3,000. So whenever it's a loss, so loss will be always whenever there is a loss, revaluation account is debited. So your journal entry will be revaluation account debited to a sundry creditors account. Okay, and next they have told you the profit, which we have already calculated. And just see, we have to pass necessary journal entries and ledger account to record the above and prepare the balance sheet after B's admission. Okay, so now they have asked you to prepare journal entries. Okay, so I won't be doing the journal entries. As you all know, what are the journal entries that are supposed to be passed? We have done it so many times. Okay, so your first journal entry, you all know, obviously it is for the new partner bringing goodwill and capital. So the journal entry is cash account debited to B's capital account and goodwill amount. Okay, so how much is the capital amount brought by B? It is 30,000. And how much is the goodwill? It is 11,000. Correct. Okay, and next goodwill. The amount goodwill is the amount goodwill will be transferred to partner's capital account. So how much is the goodwill amount? 11,000, and that will be transferred to W's capital account and R's capital account in their old ratio. Okay, so when you do that, W will be getting 6,600 will be transferred to W's capital account, and 4,400 will be transferred to R's capital account. But in this, okay, then in the sum itself, they have told that W and R will be withdrawing half of the goodwill amount. So when they withdraw, the journal entry is W's capital account debited to W's capital account debited, R's capital account debited to cash account. So half of 6,600 and 4,400, that is 3,300 and 2,200. Okay, so together 5,500 will be credited. Next is the revaluation entries. Okay, so in this sum, the loss is your provision for doubtful debts and your stock. Okay, so loss we will write together. Okay, so revaluation account debited to provision for doubtful debts and to stock. So so total loss is 5,300. Next is the gain. You have two gains here, that is plant and machinery and patent. Okay, so how much is the plant and machinery? It is 5,000. Patent gain is 6,300. Okay, you can pass this combined entry or individually. Okay, you can do it. So when you do that, your journal entry will be plant and machinery account debited, patent account debited to revaluation account. So 5,000, 6,300 and 11,300. Next is I have told you about the liability. Okay, there was 300 liability, was 3,000 liability which was not recorded. Okay, that has to be recorded. So revaluation account debited to sundry creditors account. Okay, so this is okay. Next is for transferring the revaluation profit. Okay, so first for this, what you can do is from your revaluation credit account, whatever is credited, you can deduct the debit and the difference is your profit. Okay, which is told to you. So when you do that, you get 3,000. So 3,000 is the profit. So this profit will be transferred to the existing partner in their old ratio. Okay, so revaluation account debited to W's capital account and R's capital account. So from 3,000 you'll be transferring. Okay, so 3,000 into 3 divided by 5 and 3,000 into 2 divided by 5. So when you do that, the amount that is transferred to W's capital account is 1,800 and R's capital account is 1,200. Okay, so we have done with the journal entries. Okay, then they have asked you to prepare the ledger account. Okay, so you also can prepare the revaluation account, which is simple, which you all know. Okay, so revaluation account, there are 5 items which will be affected here: plant and machinery, patent, provision for doubtful debts, stock and sundry creditors. Okay, so I won't be doing this revaluation account again and again. You all know the format and you all know how to do it. Okay, and next we will come to the ledger account. Okay, ledger account also, I know you all know how to do the ledger account. Okay, I want you all to do it by yourself, ledger account. Okay, so when you have to see what are the ledger account that is affected with the help of your journal entries. Okay, so do it by yourself. And then we will do the capital account. Here they have done it individually. You can do it together or individually. So I will do one capital account. Okay, and I want you all to do other capital account by yourself. Okay, we will do one existing partner's capital account, so W's capital account. So in W's capital account, what is the first thing that is going to be affected? That is the balance brought down. So where do you get this amount from? That is from the balance sheet on the liability side, capital amount of W. So balance brought down is 40,000. Okay, next is goodwill amount. Okay, the goodwill which is transferred to W's capital account. Okay, that is, so your journal entry is goodwill account debited to W's capital account. So W's capital account is credited. On the credit side of W's capital account, you'll be writing goodwill account. Okay, and then the goodwill is withdrawn, isn't it? So when it is withdrawn, the journal entry is W's capital account debited to bank account. So W's capital account is debited. On the debit side, you'll be writing bank account. Okay, then you don't have general reserve in the sum, you just have revaluation account. So revaluation profit also has to be entered. So revaluation account debited to W's capital account. Okay, so I want you to do other capital accounts. This is B's capital account by yourself, and even R's capital account. This is a normal sum. Here you don't have to adjust the new profit sharing ratio according to the you don't have to share this new profit sharing ratio according to the you don't have to adjust the capital of the firm according to new profit sharing ratio. Okay, so this is the normal sum which you can do it by yourself. Okay, and then about balance sheet. Okay, so balance sheet also very simple, and here they have also shown you the new profit sharing ratio, how it is calculated. Okay, have they asked you in the sum to calculate the new profit sharing ratio? No, they have not told you anything, but they have calculated here. So how to do that, this is also told. Okay, so W, so what is the we have to assume that the profit of the firm is 1. Okay, from that deduct the share of the new partner, that is B. So 4 divided by 15. Okay, so you get that is 11 divided by 15, correct? So W share is 3 divided by 5. So what you have to do is 11 divided by 15, that is the remaining share, into W's share. You get 33 divided by 75. This is the new profit sharing ratio of W. Second, R. How much is the remaining share again here? It is 11 divided by 15. To this remaining share, you have to multiply R's share. You get 22 divided by 75. Okay, so this is how you do your new profit sharing ratio. Okay, I won't be telling it in detail because this type of sums are done so many times. Okay, and even we also how to do the new profit sharing ratio, also how to calculate many times. Okay, and again about the balance sheet, that is also same. Like here also you don't have anything extra. Okay, so in cash in hand, what are you supposed to write? You have to write the old balance. Okay, the old amount which is there in the sum. Okay, how much is it? It is 5,000. To that you have to add new partner's capital amount, that is 30,000, plus his share of goodwill, correct? Okay, the amount of cash that is brought by him. Okay, so when you do that, how much do you get? You get 40,500. Okay, so 5,000 plus 30,000 plus okay, 1 second. Okay, so how much is the cash amount? 5,000 was the old balance, plus 30,000 is the amount which is brought by the new partner, and 11,000 is the goodwill amount, out of which half of the amount is withdrawn. Okay, so half you have to deduct from 11,000, half is withdrawn. So half of 11,000 is 5,500. Okay, so 30,000 plus 5,000 plus 5,500. So outer column 40,500. Next is sundry debtors. How much was sundry debtors before? It was 20,000. Okay, from that deduct the doubtful debts. How much is the doubtful debts? It is this time you have created a provision in the sum. It is 300. Okay, so see this amount of provision, but since the provision is already created in your sum. Okay, what was the provision which was already created in the sum? See the question. It was 700. Okay, now the new provision is 300. So from this 20,000 deduct the new provision also. Okay, anyway 700 is deducted. Again the new provision which is created should also be deducted. So when you deduct this new provision, the amount in your debtors the sundry debtors amount will be 19,000. So that's because from 20,000 deduct the old provision plus the new provision. Okay, so outer column you'll be writing 19,000. Okay, and then stock, the value of stock was 20,000. Plant and machinery, you know there is an increase in plant and machinery. It was 35,000, now it is 40,000. Okay, 5,000 increase. Okay, and even patent, the value of patent also has increased by 12,000. Okay, and then on the credit side, your creditors before was only 20,000, but in your sum it is told that 3,000 worth creditors were not recorded, so that amount also has to be entered. And then capital amount, so this capital balance you get in partners capital account itself, the brought down carried on balance. Okay, so for B it is 30,000, for W it is 45,100, and for R it is 33,400. Okay, so when you total you get 1,08,500. So the total is 1,31,500 and your balance sheet will tally. Okay, so this is the normal sum. Okay, this type of sum will usually come for your exam. Okay, I hope this much is clear, students. If you have any doubt, do contact me. Jazakallah.